Hello and welcome to another video on cross-border payments. So in the last video, I went over to this quick recap about the cross-border payment, the process of asking ChatGPT to generate a roadmap that helped me to learn in an efficient and effective way. So I mentioned also the week 3 plan that ChatGPT output for me for this roadmap. So in the week 1, it lay out the fundamentals, the foundation of cross-border payments, right? So understand what cross-border payments is, the types, the regulatory framework, SWIFT, and corresponding banking, as well as the foreign exchange and exchange rate. So in the week 2 is now that you know the fundamentals, okay, it's time to look at the processes. So cross-border payment processes, the payment processes. And that is, well, understand the payment message types, Nostra and Vostra account, je ne sais pas, what is this? Payment gateways and providers, and these payment gateways and providers can be, for example, Wise, Stripe, PayPal, Binance, payment gateways and providers. Also Shopify or any of the POS. Another example is that cross-border payment challenge and risk to mitigate and navigate. So once you know this, okay, on the week 2, right, about the cross-border payment processes, it is time to look at the trends and advancement in that regard. So that is, well, the digital currency and blockchain, so fintech innovations and cross-border payments, especially useful for people that live in areas where they don't have access to the main financial system, whether it's because their government is not aligned to that, or they have some the country has some sanctions. The other is cross-border payments APIs. Okay, so how you can access to these cross-border payments, and what are the features that they expose? What is the capability that this cross-border payments API allow you to, right? Then case study and reward example. So first, in the week 1, okay, is to understand the introduction of the cross-border payments, know about from at least 2 sources, Stripe and Wise. So each one of them has their own particular view, which complements to cross-border payments. So Stripe mentioned, or Stripe look more for, according to the Stripe cross-border payments 101, they look forward. It talks from the point of view of business, okay, and especially business, that even though there are challenges involved in the cross-border payments, such as risk to navigate, regulatory frameworks, hidden fees, and as well as it can be complex and a challenging process, despite all of this, business look at cross-border payments as a way to reach the new markets, find new customers, and accelerate growth. So if you have a right payment strategy, with a strategy, or if you have a right strategy with a payment processes, you can improve cash flow. You can reduce costs, improve cash flows, and accelerate growth, which is something that I'm doing as a business consultant, right? I am reducing costs, I am improve my cash flow, meaning that I'm receiving from different, so I am diversifying my different source of revenue, and ultimately I accelerate my growth. So by investing in my own business and that kind of things. So because of this, so this is the Stripe definition, and they also talk about the types of cross-border payments. Before that, WISE mentioned that according to the WISE cross-border payment log, okay, they look now for the customer size, or which is cross-border payments. After all, it involves the fund. The cross-border payments, it involves is the transfer of funds across borders. So, from the consumer perspective, or for not only the consumers but also the governments or business, if you have a credit card, okay, and you want to make a purchase, or you want to make an online purchase, there are two things that matters: when the cards to pay was issued and where the business is located. So here, this cross-border payment or this transfer of funds across borders uh, is geographically dependent, right? So where your card was issued, okay, where the card to pay was issued, and where the business is located. So now Stripe mention and describe the different type of cross-border payments. So we have things like wire transfers, something that I describe here. So wire transfer, credit card transaction. Remember, the whole point of this is to transfer funds across border, across different states or nations. So wire transfer, credit card transactions, electronic fund transfer, something that I'm not quite familiar, but these electronic fund transfers, as well as the international money funds or international money orders, this might be something related to how you can provide or how you can for capital markets, I will argue, from brokerage. So international money orders, online payment platforms. So these online payment platforms are, for example of this, are PayPal, Wise, Stripe, or any other fintech that fit in that category. Binance, so online payments platforms. So yeah, I would like to know more about this example of online payment platforms. So Shopify is another one. So I would like to ask to Investopedia for this. Investopedia here, right? The best payment app, but this is our payment apps, not platforms. Alternative method for online payment. Payment gateway. Uh, So PayPal, Square, Duola, Apple Pay, Stripe. Best online payment service provider. But this is payment service provider. Online payment platforms can be the same. Can be seen as the same. Okay. Payment gateway, processor, providers, and the other is the platform. Payment gateway versus payment processors. Exactly. What is the subtle difference with all of this? So, so online payment platforms. Okay. So Apple Store, PayPal, Stripes, all of these platforms that accept payments, that allow you to accept and sending payments, and cryptocurrency. These 6 examples. So wire transfer, credit card transactions, electronic transfer funds, international money orders, online payment platforms, as well as cryptocurrency. All of these are the different type of cross-border payments. So good. So let's go to look at the wire transfer here. Okay, something that I also conducted research about that. So wire transfers is an electronic transfer fund between different banks or financial institution in different part of the world that they do that through financial systems or financial networks or wire networks. Okay, in particular here is through different wire networks that they communicate through different systems to actually make that transfer. So banks and financial institutions, okay, according to Investopedia, they solely exist to provide a wide range of uh, lending, deposit, and investment products to consumer, business, or both. Okay, according to Investopedia, this financial magazine or this financial web media founded in 1999, headquartered in New York. So this is interesting because with this, now I can take a look at the different type of financial institutions. So we have banks, traditional banks, investment banks that act as an intermediary in between different parties for managing or do complex financial operations or transfer large volume of capital. Okay, so if I take a look at the investment bank definition from Investopedia, okay, so investment bank is a financial service company that act as an intermediary in large and complex financial transactions. So after all, this is a financial service company, but this is exactly in the field of service. A financial service company that acts as an intermediary in large and complex financial transactions. Example of that, so when a startup goes public, so when a startup, something that they mention here, investment banks are best known for exactly. So investment banks are best known for their work as intermediary between the corporation and the financial markets. Okay, I would like to add this definition here, right? So investment banks, after all, uh, so they are known. Okay, so investment bank. Let me write it this. So investment banks are best known for their work, as intermediaries between a corporation and the financial markets. That is one of its main roles. Okay, so investment banks are known or are best known. Interesting. So investment banks are best known for their work as intermediary between the company and the financial markets. Financial markets. So, for example, you just want to know a couple of financial markets here. Examples of financial markets here. Uh, Stock market, bond markets, commodity markets. Okay. Financial markets, such as uh, stock markets, Okay, so what are some examples of financial market and their roles? Stock markets, like this. So stock markets, bond markets, all right, and commodities market. And commodities markets. Okay. All right. So understand this. Okay. As an intermediary. Okay. So yeah, that's pretty much a type of financial institution, aka investment banks, uh, do. Right. So these are financial service company that act as an intermediary for handling large financial complex operations. So they're best known as act as an intermediary between the corporation and the financial markets. So common example of financial markets are stocks, bonds, and commodity, according to Investopedia. And this source is something very, very important. Go Investopedia, right? So Investopedia. Good. Investopedia. All right. So, can we just describe briefly about this, just to understand more of this? So, the stock market is where shares of publicly traded companies are bought, sold, and issued. So, stock markets are is a place, okay, exactly, is where people is where shares interesting. So stock market is where shares of publicly is where share of publicly trade companies. Stock market is where share of publicly traded companies. Stock market is where share of publicly traded companies are bought, sold, sold, and issued. Period. This simple definition is good enough, at least to me. Okay, for the sake of the uh, for the sake of hmm, for the sake of the stock markets are it's not is are interesting. He autocorrected me. So stock markets are, that's right, because this is a substantive, right? So stock markets are where publicly traded company are bought. Yeah, this okay. No. So stock markets are where shares of publicly traded companies are bought, sold, and issued. So bond markets, okay, so here bond markets, so no here, so bond markets refers broadly to the marketplace where investors buy and sell debt security. Debt security. Bonds are typically traded, but notes and bills are also exchanged. And this is something important to understand. So what you're doing is buying and or selling death security. Death. Jesus. Death. Interesting. Very, very interesting. Very, 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 very interesting. Mm-hmm. Librarian. Is that job still being around? Oh my god. Trending videos. Interesting. This is a way of how they can market that. Love it. Love it. Okay, interesting. This is a way to market. Yeah, yeah. Using their website is too well. This is trending video. This is part of our marketing. Holy moly. All right. So in any case, so bonds market refers broadly to the market where investors buy and sell debt security. Interesting. Interesting. This is bond markets. Bond markets. Okay. This is bond markets. Bond markets refers broadly. Okay. It refers broadly to the marketplace where investors buy and sell debt securities. Okay, securities. You may wonder, what is a security? And a security is a financial asset that is fungible, that can be easily traded. So financial, in this case, securities. Okay, from Investopedia. So a security is a fungible, negotiable financial instrument that holds a monetary value that can be easily traded. Okay. So the term security refers is a fungible, negotiable financial instrument that holds some kind of monetary value that you can share. A security can represent ownership in a corporation in the form of stock or a creditor relationship with the government, bond, or a corporation represented by owning the entity bonds, or rights to ownership as represented by an option. Rights to ownership. And this subtle difference is something that people on those fields, right, that they inherit a lot of the knowledge, technology, and experience from past experience, or from past uh, countries or governments or empires, right? So, for example, the Dutch Empire, and then the British Empire. Now they are on the U.S. Empire. So all of this experience, now they applying this. Why? Because this is a way of how we can easily exchange value in a way that is coherent, honest, transparent, allegedly, but in a way that is easily done. So we mitigate the risk as much as possible. So that's why they are so vigilant when all of these financial institutions and banks and brokerage, they want to do anything to keep their security at the top. They want to create is this fortress. which end up with the cryptography, right? So cryptography field is something also interesting because uh, Mox, Moxing, Moxie Spike, I think it is. Um, the CEO of Signal, um, Moxie Marlin Spike, exactly. Moxie Marlin Spike, okay. So yeah, is the founder of this. So it's actually quite interesting because this man is focused on that field. So Moxie Marlin Spike is it is name. It is of course is a pseudonym. But yeah, so this is what it is. Moxie Marlin Spike. And it's funny because none of them will take them seriously, especially if you have dreadlocks. So this is interesting. This is why I'm not surprised, man. Why I'm not surprised. Uh, so yeah, okay. Why I'm not surprised of this, and it is funny because people that works in that field, the fields of mathematics, I will argue that those that are tremendous success, or at least that have some monetary success, now they can express themselves. You know, because otherwise you don't have the skill set to do that. So you have to obey. So you have to represent this image as a company. In any case, so the thing with Moxie Marlin Spy is that as a security software and also cryptography, this is one of the things that uh, financial services has all about. You know, is the exchange of now this data, but we must protect this data at all costs because it can be used for bad actors, all for in a way that is not aligned to certain values. Okay, perhaps certain Western values. But in any case, the whole point of this is that understand what is a security, right? As I know more about is the investment banks, which is a type of financial institution where this investment bank, they are a financial service company that act as an intermediary for companies to handling large and complex financial operations. So financial or investment banks are best known. Investment banks are best known as uh, act as an intermediary between the company and the capital markets, or in this case, as the financial markets. And common example of financial markets, according to Wikipedia, we have is stock markets, bond markets, and commodities. So stock markets is where stock markets are where shares exactly. So stock markets are where shares of publicly traded companies are bought, sold, and issued. Whereas bond markets are where bond markets refers broadly So bonds market refers broadly to invest. Bond markets refers broadly to the marketplace where buyers and sellers, in this case investors, buy and sell debt securities. So this debt security or this financial instrument that are fungible, meaning that you can convert into another, it's fungible, that holds some monetary value, is based on debt, government debt. Interesting. So your buying and selling is government debt, promise of this government. Interesting. Holy okay. Holy moly. And another example of financial markets, okay, is commodities. Commodities. So commodity markets, right? So commodity markets refers to the marketplace where investors buy, sell, and trade raw products such as oil, gold, or corn. Major commodity exchanges in the US are Chicago Mercantile Exchange, the New York Mercantile Exchange, and the Intercontinental Exchange. Hard commodities are natural resources that are mined, such as gold and oil. Soft commodities are typically agriculture, including corn and livestock. Interesting this division here, this type of commodities. Commodity markets can include physical trading. Can include, it's not necessarily that, can include physical trading, but this day the vast majority of commodity trading is done through the use of financial derivatives. Derivatives allow investors to profit from commodities without having to physically possess them. This is something pretty fucked up, man. This is something pretty fucked up. I was making a research, and this is something I would like to talk to Willie. It's like I was making a research that commodity markets, according to Investopedia, this financial web magazine, this financial web media service, founded in 1999, headquartered in New York. They mentioned I was making a research about cross-border payments. That led me to wire transfers, where this is done by banks and financial institutions. That in order to understand what is financial institutions, I went to look at, well, investment banks, mortgage banks, and brokerage firms. Okay, so in the investment banks, I looked at this are financial service companies that act as an intermediary between a company and the financial markets to process these complex or large operations. And the financial markets can be is stocks, where publicly where shares of publicly companies, or this is a place where this stocks are stocks are where share of publicly traded companies are bought, sold, and issued. This is the stock market. The other is uh, the other is the stock markets. Bond markets typically refers to a marketplace where investors buy and sell government debt securities And debt securities are fungible financial instruments that hold some monetary values. And then I look at the commodity, and hear me out. So with the commodities here, you have so commodities refers to the marketplace where investors buy, sell, and trade raw products such as oil, gold, or corn, right? So the major commodity exchanges in the U.S. are the Chicago Mercantile Exchange and the New York Mercantile Exchange, and the Intercontinental Exchange. Okay, there are hard commodities and soft commodities. So hard commodities are natural resources, and soft commodities are typically agriculture, including corn and livestock. So commodity markets can include physical trading, but this day, the vast majority of commodity trading is done through the use of financial derivatives. What does it mean is that these derivatives allow investors to profit from commodity without having to physically possess them. What the is this, man? If you don't have something, what made you think that this belongs to you? Oh my God. What made you think that this belongs to you? Real real retail investors usually don't have direct access to commodity markets, but average individual investors can still gain exposure to commodity through stocks, bonds, and ETF. This is something pretty fucked up. That the commodity markets that refers to the marketplace where investors buy, sell, and trade raw products such as oil, gold, and corn, and they do that through different exchange. So you have the Chicago, New York, and Intercontinental Exchange. Okay, so hard commodities are natural resource, whereas soft commodities hard commodities are natural resource that are mined, whereas soft commodity are typically agriculture. Soft commodity are typically agriculture, including corn and livestock. And because commodity markets uh, can include physical trading, but this day the vast majority of commodity trading is done through financial derivatives, meaning that investor profits for owning meaning that investors profit from commodities without having to physically possess them, without having physically have them. This is something fucked up. Because the derivative option here is that you are never owner of that thing that you think you have. First, because you don't have that. And if you don't have that, it's not in the it's not in the elementary table. It's like hell is in this. Oh my God. Okay, so with that, that'll be all for today's video. Take care. Bye bye.